Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday to you all. It's Friday the 7th of February, and we got the big news that we've been waiting for all week, and that is the non-farm payrolls brought to you by the Bureau of Labor Statistics. And remember, back in December, we had a really low number, which kind of surprised the forecasters at 75,000. But the forecast is supposed to jump all the way up to 190 because we've been having some pretty good Januaries the last couple of years of 190,000 new jobs being created. And it came in a whopping 113, and I mean that sarcastically because that's nothing. That's not even going to compete with the amount of people coming into the workforce versus those who are leaving the workforce, and that's not job creation right there. So that's something we definitely need to keep an eye on. One of the analysts pointed out there it's not a red flag, but it's definitely a yellow flag to keep an eye on. So it's something they're not going to panic about right now, especially because the Fed has proven that they'll stimulate the economy if they need to. They'll put money back into it. So they'll leave it into the Fed's hands that if the economy does look like it's slowing down, that the Fed would do something to kind of go back and stimulate it. And last but not least, we got the unemployment rate. So at a 6.7% rating, unemployment rate, and the forecast is supposed to dip down to 6.6, and it came in at forecast. So we can go ahead and take a look at the headline news, and basically stock market's up. So they're kind of disregarding the news a little bit. They do find some, they do feel that there is some positive in that news, but I guess I don't know if you can really look at a positive in there. So, anyways, but they seem to find some positive news in those, even though it's a small number here. So, with the bond market and interest rates, we are better than where we left off yesterday. Remember, we had kind of a little bit of a sell-off. We did hold at the 10-day moving average, and now we popped up. We did kind of dip it, so we did close that gap that we had opened up earlier with that wick. You could see down touching the lower portion of the ceiling. And now we're hovering above the 200-day moving average. So what this means is that we're up approximately about 34 basis points from where we started or left off yesterday. So good, nice improvement in the interest rates today. This could be something to help us to keep the leg going upwards a little bit. Next week we do got some more economic news that could help us out. So we'll have to kind of wait and see. But in the meantime, rates are showing some improvement today, Friday. All right, folks, thanks for watching. We'll keep this short and sweet. You guys have a wonderful weekend, and we'll see you guys on Monday. Again, thanks for watching.